Hello viewers, we'll be going over gold futures. In this video, we'll be going over my trade idea of the week and how I developed that idea. So let's start off with the technical analysis. We're currently up 30 basis points on the 1 hour chart. We have now approached to positive MACD and we're not near overbought RSI yet. If we expand that further onto the 4 hour chart, what we have here is we bounce right off the 200 moving average, and that is a good sign that the uptrend has not completely deteriorated. And we did encounter oversold RSI back on Tuesday, and at the moment we see a convergence on the 4-hour MACD, and we may see also a temporary resistance on the 18 moving average. If we expand that further onto the daily chart, what we have here is we got off of overbought RSI and we now seeing a divergence on the daily MACD. And at the moment, we are closing below the 18-day moving average, which is a slight concern. Ideally, for the uptrend to remain healthy, we do want the candlesticks to close above the 18-day moving average, the purple lines. So for the trade idea of the week, I'll be trading GLD. And for the trade idea and position, size will be less than 1% of my portfolio. My entry will be $172.36. That is fairly close to where the 50-day moving average resides, and my sell target for that position is $184.14, and my stop loss will be $167.50. On the other hand, if I do decide to open a short position, I will enter it at around price of $185.82. That is slightly below the 9-day moving average right here. And my sell target will be $177.41, and my stop loss will be $191.06. So how did I develop these trade ideas? These ideas come from the day-by-day probability model. The range, the bullish and bearish ratios come from this model right here. So these models are available in the link below, so do check it out. As we progress to the 5th day, we have a 69% chance for GLD or gold to climb higher between 0 to 4%, and on the extreme case, a 6% chance for it to climb between 4% to say 8%. On the other hand, to the downside, we have a 25% chance to fall between 0 to negative 4%. So which one of these 16 models we should use as a reference? Let's check the line graph right here. So the blue lines are current trend, and the line overlapping it happens to be the best match. So right here we have our current trend, and below it is the trend that we found on the line graph above. This trend dates back to June 2nd to August 26, 2011. So let's begin comparing both of the trends. So what we have here on the current trend is 1, 2, 3, 4, 5, 6 points. And on the trend in question also have 1, 2, 3, 4, 5, 6 points. So there's reason to believe if the trends and patterns are somewhat the same, the outcome and forecast should be fairly the same. So now let's examine the day-by-day forecast for GLD or gold back in June 2nd to August 26th. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, or a week of trading. So if we go back to examine June 2nd right here, back then GLD or gold continued to climb higher around 3% in 1 week. If we head back to the day-by-day probability model, that coincides with this standard deviation of 69% chance to climb between 0 to 4%. If we examine the technical performance of each trend, so the trend that we just found and examined, and compare that to the current trend, what we see here are somewhat similar on the monthly high, somewhat similar on the monthly low, and there are technical difference on the 10 simple moving average and also the 20-day simple moving average, and somewhat similar on the 50-day moving average. So there are technical differences among the two trends, so do keep that in mind. And again, these models are available in the link below, so do check it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.